Smartest data, quick definitions. To earn, you have to learn. Growth stocks. There are two broad divisions, value stocks, then growth stocks. Let's go to the video, look into growth stocks, define and explain with 3 quick bullet points to take away at the end. A growth stock is a stock of a company that has experienced higher than the average growth, sales, operating profits, and depending on the stage and development, net earnings. So a stock becoming a growth stock, is it more to do with sector influences or company specific factors? Well, probably a combination of both. Being in the right sector is a major factor. The growth stocks represent a group of companies that have demonstrated above average growth in sales and operating profits. Depending on the stage and development of the business, net earnings should be growing at an above average rate. Investors broadly anticipate that the high rate of growth is set to continue and will often accept a multiple expansion of the various ratios, PE, price to sales. As growth rates are, for some companies, significantly above the average growth rate for the broad stock market, a momentum factor occurs. Momentum is reflected in the valuation multiples significantly higher than the stock market averages. In comparing a growth stock's current ratio multiples against its historic means and the historic mean for the stock market, the multiples are likely to exceed the averages. Then again, if these companies continue to grow rapidly, the valuations could be cheap. Companies in the growth industries often have a high demand for capex expenditure, specifically expansionary capex. Maintaining a leading edge in their specific technology through continued innovation is critical. In general, the growth stocks do not pay dividends. Instead, net earnings is transferred in full to retained earnings in order to reinvest. Growth stocks are heavily scrutinized. Companies unable to continue to fulfill the high, lofty expectations can see dramatic declines in their share price. The technology sector is where many of the growth companies are found. Three takeaway bullet points regarding growth stocks. Being in the right sector has a lot to do with a company becoming a growth stock. Valuation multiples can be expected to be above the averages, and as a company continues to grow, a momentum factor comes into play. If a company cannot maintain the expected growth rates, then the share price will be punished severely.